Welcome everyone to the Vested Interest channel. This is Shane, and after a big drop today, we are going to take a look at Home Depot out of the consumer discretionary sector. I know we have looked at this one in the past, but nonetheless, we're going to take a look at them again. Now, this is the vested interest stock screener. This is the criteria we will be running through in this video. It must meet 5 of 8 to make it onto my watch list. And just keep in mind, this is just a watch list and an initial screener. It is not a deep dive into the financials. If it makes it onto my watch list, which I believe Home Depot has in the past, then I do a deep dive into the financials, look at their balance sheet, their income statement, work out a discounted cash flow analysis on the company, and then maybe potentially in the future add it to my portfolio if I am looking to add a new position or shift from one position to another. You should not be copying anyone's investing strategy. Make sure you're doing your own investing based on your research and your strategy, based on your age, when you want to retire, what your goals are, that sort of thing. Don't blindly copy me or anyone else you see on YouTube or any other site out there. All right, so back to Home Depot. You can check them out on their homepage if you want to know more about this company, and I'm pretty sure everyone knows about this company. If you live in America, have done any kind of work on your house, even if it's a rental, you may have visited Home Depot, probably have visited Home Depot. But if you want to check them out on their homepage, www.homedepot.com. That's www.homedepot.com. That is their homepage where I pulled this information from. When the Home Depot was founded in 1978, that's a year older than me, Bernie Marcus and Arthur Blank had no idea how revolutionary this new hardware store would be for home improvement and the retail industry. And that's really what it is, a home improvement store more than a hardware store. Today, we're proud to be the world's largest home improvement retailer in more than 2,300 stores across North America. We aspire to excel in the service to our customers, associates, communities, and shareholders. That's what leadership means to us. That's the Home Depot difference. And you can see here some information down below, our values, inverted pyramid, how they look at the overall layout or setup of the company, three-legged stool. If you go to their homepage, you could click on each one of these and see what they're talking about there. But again, I'm pretty sure you're aware of this retailer. They're selling you lumber, they're selling you washers and dryers, carpet, tile for your bathrooms, kitchens, whatever you need for your home improvement, your plants outside if you do a garden or want some shrubs around the house, some trees. I bought some cherry trees there this spring. So again, I'm pretty sure you're aware of this company, whether you're a gardener, whether you like to do your own DIY projects, do-it-yourself projects out there. You probably have visited Home Depot at some point. Now, the reason we're taking a look at them, down 6% on the day, big drop for the day. We are talking about the Home Depot, ticker HD, out of the consumer discretionary sector. Closed out the day at $336.54. Looks like they're up slightly in the after hours there. 52-week range as low as $326.31, as high as $439.37. They are within 15% of a 52-week low currently. Under 372 and some change puts them in that range. They have a market cap of $334.987 billion, a beta of 1.05, so they are slightly more volatile than the overall market, one being the market. Price to earnings PE ratio of 22.86. That seems a little elevated, but if their earnings are growing fast enough, then maybe that's justified. EPS per share, earnings per share is at $14.72. Earnings date was today, November 18th. So maybe it's something around their earnings, whether it's their forecast, whether they didn't meet their forecasted earnings to date, or whether they reduced their projected earnings in the future. Maybe one of those or both of those has them on a downturn. Forward dividend, $9.20, divide by 4. They are a quarterly payer, or you'll see that here in a little bit towards the end of the video. Current yield of 2.57%. Ex-dividend date, September 4th. So we are past that. Looks like they paid out on the 18th. So you would be in line for the next dividend, but you're going to have to wait a couple months to get it. 1-year target estimate, $433. That's according to Yahoo Finance. That would not quite be back to their 52-week high of $439.37. So they see some upside from where it currently sits, but not back to that 52-week high. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. It's a quick check. It's not the end-all, be-all. And to look at the dividend yield theory, we look at their 5-year dividend yield average, 2.31%. We can compare it to their current 2.57%, or over here forward 2.57, same number. And since it is higher than their 5-year average, that actually speaks to undervaluation, at least potentially according to dividend yield theory. Payout ratio, I like 75% or lower for companies like this. They're at 61.86, so below that 75% threshold that I like. Now, I want growing free cash flow. Companies can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, pay a dividend. This company does, raise that dividend over time, and buy back shares, or potentially keep some of that cash on hand as cash or cash equivalents. We want a company to be able to, or at least I do, want a company to be able to do all of that with their free cash flow. So going back here to January 2022, you can see 14 billion in free cash flow. 2023, 11.4, so a bit of a downturn there. 2024 up to 17.9. 2025, 16.3 billion, trailing 12 months at 14.3. Now, repurchase of shares going back to 2022, 14.8 billion, very nice repurchase of shares there. 2023 down to 6.6, so definitely a decrease, not only with free cash flow, but decreased the repurchase of shares. So definitely a downturn from 2022. 2024 down, or back up to 7.9 billion, and 2025 649 million. So you're seeing a bit up and down with the free cash flow, as well as adjustments to their repurchase of shares. Now, jumping over to stockanalysis.com, another source I go to. These are just two sources that I like. You can pick any sources that you like, but I would recommend two, if not three sources. So if you do see some information that is not, jiving with from one source to another, you have a third to go look at, and you can make sure the information you are looking at is accurate and up to date. The consensus from the 18 analysts over at stockanalysis.com is a buy, with a low estimate of $370. It currently sits lower than that low estimate. So if it came back up to that $370, that would represent a potential 10% increase from where it currently sits. Average estimate, $438.17. That's pretty close to what we saw with Yahoo Finance on the previous page. That would be a potential 30.27% increase from where it currently sits. And if it happened to hit their high, 497, that would be a new 52-week high, and that would be a potential 47.76% increase from its current price per share. Now, some of the statistics initially I like to look at as part of the screener. Return on capital employed, I like over 10%, and earnings per share growth, I like 5% projected over the next 5 years. For return on capital employed, they're at 29.95, so well above the 10% I'm looking for there. And earnings per share growth is 7.44, so that's above the 5% I'm looking for there. And revenue growth is forecasted at 4.37%. This is typically part of more of a deep dive number, but I like to include it here because it's right above EPS, and I can snip it at the same amount of time that it takes me to snip EPS, so why not show it? Now, quarterly payers, I mentioned, payout ratio again under that 75% at 62.41. Dividend growth 3.51%. So they are growing that dividend above typical inflation, which is around 2%. But right in line with about what inflation is now, around that 3% range. So I like anything really above inflationary around 2%. But if it has a high dividend payout, I will forego some of that dividend growth depending on how high it is. In this case, that's not real aggressive dividend growth, but it is still growing. 15 years of growth, buyback yield negative 0.23%. So they are issuing more shares than they are buying back, slightly, not a ton, but they still are. Shareholder yield is positive 2.46%. This company pays out like most companies do on the March, June, September, December timeframe. Going back in time here to 2023, they were paying $2.09. Raised that up in March 2024 to $2.25. Most recent raise was this March in 2025, $2.30. And I would anticipate if they're going to maintain this growth in March of 2026, you'll see another raise. All right, let's run them through the screener. Understand the business. Yes, I understand Home Depot. I shop there. It's where I get some of my plywood whenever I need it. Definitely some of my stuff for my, I usually have a garden every year, so some of my garden stuff is typically there, and whenever I need tools or anything like that, that's typically where I go. Sometimes Lowe's, but most of the time Home Depot. They do give a military discount to those of us who are veterans, so I like that as well. Lowe's does too, but Home Depot's is usually a little nicer on more products, it seems like. Growing dividend, not that that's a reason to shop there, but it is something that I like about them, so I thought I'd note it. Growing dividend, yes, it's a little over 3%, not quite 4%. Dividend payout ratio is under 75%, in the 60% range. Dividend yield theory says they're potentially undervalued right now, so check there. It is within 15% of a 52-week low, so check there. Return on capital employed is above 10%, so check there. Earnings per share growth is above 5%, so check there. So we're looking at 7 out of 8. This one, I believe, is on my watch list, has been for a while. Wouldn't be a bad time to review this one again with it being so close to its 52-week low. Let me know what you think of Home Depot. Is it a buy? Is it a hold? Is it a sell? Maybe you're one of the people that was selling today and you're part of that 6% downturn. If so, let me know why in the comment section down below. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Again, let me know what you think of Home Depot. Is it in your portfolio? Is it one you're holding? You're buying on the recent dip? Or again, are you part of that downturn and you were selling? Let me know in the comment section down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Investing during educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.